Hi, everybody. It's July 10th, the market update desk with Scott Riley, NMLS 157524. I want to go over a few of the things that were out today. It's definitely a slower week with data, but yesterday we did get the release of the previous meeting's Fed minutes. Just want to touch on them a little bit. Now, the Fed minutes, keep in mind, were from 3 weeks ago on June 18th. So it was a little bit dated information, especially in relationship to the new jobs report we got last week, which was more than expected, and the downtick on unemployment. As a result, the minutes that we got from that report are going to be potentially a difference of opinion compared to where we're moving forward. So, but it did show that there were divisions within some of the Fed members' opinions, where some of them were leaning more aggressively towards moving up rate cuts, such as Governor Waller, Bowman, and potentially Goolsby. Those were in favor of what might have been a July rate cut. Now, others wanted to wait and not cut the rest of the year, and some were in favor of cuts later this year. Likely, what our opinion now is starting in September. So it's going to be interesting to see as we keep going forward. Some of the Fed members, what they come out with some commentary. The jobs data, if it gets weaker, that could definitely move what the new opinion is of everything. Bottom line, realistically, the first chance of a rate cut got pushed back to September, like we were saying. The market currently is factoring in the likelihood of a 25 basis point or quarter point cut in September, and possibly one other later in the year. So, initial jobless claims. Now, the report today showed that initial claims fell slightly from 232,000 to 227,000 from the previous week. But keep in mind, this encompasses the July 4th holiday. So typically, these shorter weeks trend down, not up. So we're probably going to see a tick up next week. Now, the big one is continuing claims. That rose to 1.97 million, this close to 2 million, which the 197 is a cycle high and the largest figure since November of 21. The continuing claims, like I said, are approaching 2 million, and this is a big inflection point, so we're watching it real closely. It's showing that once people lose jobs, it is harder to obtain them, regardless of what the BLS jobs report is showing. We got the wage tracker from the Atlanta Fed today, and it showed that job stayers' income rose at 4.2% versus the previous report of 4.3%. So we saw a backward trend there. Now, what's really interesting is job changers, their income decelerated from 4.1% to 4.0% and is now below job stayers. This is now also lower than the pre-pandemic levels, and it emphasizes what we're seeing in the continuing claims, that finding a new job is not all that simple. On the technical side, yesterday we saw a good day because we saw a positive from the bond auction. Today we're seeing a little bit of clawback from that, a little bit of a give back. On the 10-year Treasury, ticked up just a couple notches, and we're testing the 200-day moving average. So we're going to watch that real closely. Without a ton of data this week, we're going to probably trend to trade in a very tight line. So Scott Riley, the Market Update Desk, NMLS 157524. Give us a call. We'll help you get pre-approved, work to help get your offer accepted, and then get your loan through the process simply, easily, and stress-free. 616-293-2189. Have a great afternoon.